We just saw a market maker sell model begin and end in today's trading session, and we're going to review every part of this market maker sell model, because if you want to become a profitable trader, this is what you need to focus on. Disregard everything else, all your trade ideas, all your setups. If you view them in the context of what you're seeing on this screen right here, you'll have more opportunities to be successful. So let's begin with the opening price. Right here we have the opening price at 930. 930 opened right here, and immediately we started pushing higher. We filled this opening range gap immediately, so that took away our first opportunity for a potential draw in liquidity. At this point, we're just seeing price finding support and resistance at these new day opening gaps, which we have marked, which show up every single day. Then we mark out our previous day low and our previous day high, which is sitting right here. Now the previous day high is also sitting within this 15-minute fair value gap. So what I expected price to do was to come up to this level and then sell off. Now, I made two mistakes in my trading today where I actually sold. I went short right here, expecting us to go lower, and missed that opportunity, and then disregarded my bias and went long right here and took another loss. Lesson learned. How can you learn from this? Well, the nice thing about market maker sell models and market maker buy models is they have structure, very obvious structure. Initially, we have our accumulation or our consolidation before the move begins. The 9:30 bell opens. We have news at 10 o'clock, so we're not going to take any trades till after 10 o'clock anyway. So we have 30 minutes of waiting. We see for 30 minutes price tick higher, and at 10 o'clock we get this nice big green candle right here. Now, when we look at this big green candle, we're so close to the previous day high that in my mind, we need to wait for a key level to be hit. Anytime you want to use a market maker buy or sell model, it needs to be in the context of hitting a higher time frame key level. What is that higher time frame key level? Well, it's the previous day's high or yesterday's high. That is a very significant key level that we can put our eyes on and look to see how price reacts. Well, price reacted pretty significantly, and I personally, my first loss was looking for a sell right here. I was waiting for the breaker to take place right here, and ultimately it came up into it, gave me 5 handles, and then just exploded right past it and didn't give me an opportunity to do anything else. So I took an L on that one. At this point in time, seeing the 9:30 opening price and seeing that we literally did not drop below this, I knew we were going to hit this level. I had conviction on that. But when we broke through that and I kind of got butthurt that I had a loss and we started moving higher, I took another long here on the 30-second chart, where I thought that price was going to be a trend day and we were just going to move higher and higher, but we didn't. We closed right here. I took a long right here, and it immediately ran against me. That's where I'm like, okay, need to take a second. Let's reevaluate and look at what my original analysis was. And my original analysis was that we were going to run our opening 9:30 price down here. So what do we have here? We have our first accumulation stage. We have our second accumulation stage. And then we have our smart money reversal that takes place right here. This is our low risk entry, which I missed that opportunity because I wasn't looking at a market maker sell model. I thought we were going long, so I missed that. Okay. Next key indicator in price is the previous day high. After we come back below it, look how we respect this level once we break through it. 1, 2, 3, 4 times we wick into that previous day high, not running higher. Now, admittedly, what I was looking for was a purge on that liquidity right here. I wanted to run there and then drop. So this is what I was waiting for, in price to give me the confirmation that price was actually going to move lower. Well, it didn't. It didn't do that. We maintained this idea of relatively equal highs and we dropped. So I missed this opportunity here. Okay? Because when you look for something specific, it doesn't happen, you got to be willing to miss a move and just let price go. Okay? Now, where did we get some opportunities? Okay? Once we had this sell-off, I knew that we were probably going to get bigger moves. So I initially took a trade here. Once we broke lower and we got this retracement, I targeted the new day opening gap. And we made a trade from this point to about here. I didn't hold it through the whole thing, expecting we were going to come down to here. Then we consolidated above the new day opening gap. What is this called? This is called our first stage distribution. This is the first stage of your distribution part of the market maker sell model that we have right here. What do we look for in this stage? Well, we expect price to move aggressively pretty quickly, not running these lows, because we should have a second stage of distribution, which we see right here. And we'll talk about that in a second. Now, when we have our first stage distribution, there's a couple different things that can happen. It has the ability it can retrace very small, very lightly, like it did here, and move lower, or it could actually run a little bit deeper. I wanted it to see, admittedly, wanted it to see it go a little bit deeper. I wanted it to go into this level right here. What is this level right here? That is a breaker box. This is a breaker box right here where I wanted price to come into. We have our high, low, higher high. And as we break lower, I wanted price to just wick up in here to say, hey, I see this level and now I want to go lower. Well, it didn't give us that opportunity. It didn't give us that opportunity. Instead, it sold off right here, reaching for our first fair value gap of the day. This was our first fair value gap of the day. Now, what happens after we get our next big move? We get a retracement. Now, I did call this out and I did take this short. When you wait for your stage 2 distribution, you want it to come up to a key level. That key level is on the other side of the market maker sell model. That is this level right here. This is the lowest closed body on the 1 minute time frame. You could have done this on the 30-second, the 5-minute. The levels would change. This is why you got to thumb through the 30, 1 minute, and 2 minute time frames to see which looks more advantageous. But price hit this level and I took a short. That's where I took a short, and I took that short for about 30 handles right here. Now, I did end up selling it before we got this retracement. And one thing that I need to work on in my personal trading is understanding that we are in a market maker sell model. I need to believe it even more, because when I get this retracement, I get scared out of my trade. Instead of realizing that we're in the second stage of distribution and we're going to have some consolidation before the final descent into the beginning part of the market maker sell model, which was right here. The last thing that you want to know is that once we start expanding lower, after your second stage distribution, it tends to be very, very aggressive. And I called this out in the stream. You can check out the stream. I'll link that video up here. But you can see right here that it went and ran this level in 2 candles. This is indicative of the second portion of the second stage distribution, where it will aggressively run that final move, as you can see right here. And since then, we've been consolidating. We have these equal lows that are down here, but it doesn't want to run those. It may want to wait for NFP, which is tomorrow. But this is the ultimate structure that you need to understand as a day trader if you want to see more success in your trading. And if you just study this model, If you just look at this and find this in price action and then try to identify these key levels that I've pointed out here, you'll begin to recognize them more and more in your own trading, and you'll be able to execute on them like I did here. Now, there's multiple things that you can work on. I'm better on my executions, but I'm not very good at holding my trades for longer moves. I'm more comfortable taking my 10, 15, 20 handles, getting in, getting out, and being done, when I could have capitalized on a significantly larger move. This would have been 90 handles from the time that I entered to the low. That would have been 90 handles that I would have been able to capitalize on, but I didn't because I haven't learned to hold my trades longer. So we'll make that for another video. If you like content like this, hit the like button, subscribe. Thanks for watching. We'll see you in the next video. Take care.